Good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Just a moment while I get you my monitor. All right, so the market's just opened up, and for those of you new to the trading room, let me give you a real quick overview of what you're looking at here. Well, actually, maybe I don't need to rush, because if today's trading is anything like what it's been the last couple of days, I hope people will ask questions because there's not too much to trade. You're looking at the diversified trading system, and it's diversified because we're looking at the markets from three different points of view. Here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the latest addition to the DTS family. This one is called the Raptor, and the Raptor actually incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading tool. Well, let's take a look here what's been going on in the overnight, and you can see a very quiet session here in the NASDAQ. So big run up toward, well, actually for most of yesterday, we took advantage of part of this move here before we took our break for the morning. Looks like there was a little bit run up in the afternoon. Very, very quiet Asian session, very quiet European session, and the market pretty much taking over from where it left off. When you get a market like this that's stuck in an obvious sideways range, well, there's a couple ways you can approach this. Some of you are going to be seeing this as a pennant style formation, which is probably how I would view it too, and then others will see it as more of a channel, which is like this. Regardless of how you're viewing it, the best way to trade it is to actually let the market break out, then retest to let you know that breakout is going to hold, and then look for your buying or selling opportunity. Same thing here to the downside. Let it break out, retest, come back with a signal. This pattern repeats itself time and again, and if you have the habit of waiting for it, you'll usually be well rewarded. Look at our filter down here on the Eagle. It's just so evenly balanced. If anything, no, I was going to say, if anything, it looked like the sellers were getting a little bit stronger, but we started getting some larger green blocks here and some smaller red blocks, which actually tells me the opposite. It tells me that the buyers, at least short term, are getting a little stronger. So we generated a red bar sell signal here, or pardon me, a red bar buy signal. And it's one of our higher probability signals on the Eagle. It looks like it's getting some follow through. Look at the trade forecaster. Trade forecaster says we're going to be in trend mode for about 100 minutes here. So for the next hour and a half, well, we'll have to see how that plays out. Oh, by the way, let me give you some links if you're interested in knowing more about some of these tools that you're going to be seeing here. You can find out about them. Oh, all right, hold on a second. I'll get you that link in a moment. All right, so we've had the breakout, and here comes that retest now. Getting a first micro-macro cross signal here on the Hawk. This is also one of our high probability signals. Well, we're in a demo room here, so allow me to demo you the software. So all the signals develop the same way. You get a warning dot, and then when the signal completes, you get a triangle and a hash mark. So this tells us that all the trade parameters have been met, and now it's our decision whether or not we want to take the trade. you're going to notice that we don't take every single signal. We tend to focus on the higher probability signals, of which the first micro-macro crossover is normally one. I'm leaving my stop a little bit deep. I should have actually maybe tried to risk it all the way down here, just to give the trade a little bit of room to wander, because that's how it's been well, this week anyway, and toward the latter part of last week. Can't be too aggressive with your stops because the market is just wandering. It's taken a while to get its bearings. So now that we have a trade in play, let me see if I can find an appropriate stop strategy to automate it. So this tool that I'm using right here, this is called the Trade Manager. And with the Trade Manager, you actually have 16 different stop strategies to choose from, all of them fully customizable. And it's not even going to give me a chance here to show you how this works. Oh, there's the buyers finally showed up. Okay, I might choose to go with something like the parabolics or perhaps the bar high-low, which are two of our more aggressive stop strategies. These blue dots indicate where my stop, where Trade Manager is going to run my stop. So according to the parabolics, I'm going to enable it now. If this market continues higher from here, you're going to see Trade Manager automatically roll my stops higher. There you go. So you see we're starting to roll the stops a little bit. Now, a lot of times with a situation like this, I'll go with something like the bar high-low, which would already have my stop below this bar right here. But like I said, the way the markets have been trading of late, you just got to give it a lot of elbow room. In fact, the parabolics might even be a little bit too quick. Let's try something like, oh no, we can't do those. We'll hold our stop down here. We'll go with the swing low. There we go. Boy, oh boy, just like watching paint dry. A lot of times, the first few minutes of trading, I tend not to take a trade either, just to let the market kind of get its footing. We got lots of time to trade. We don't need to rush into anything. But we'll see whether we can't nurse this trade to a profitable position, or perhaps just minimize our exposure here in a little bit. All these yellow bars tell me that the market is sideways. People always asking what to do about choppy markets. Well, choppy markets, by their definition, are nearly impossible to trade. You know, unless you're going to scalp in and out for a tick or two, which is only going to make your broker happy. They're best avoided. So with the hawk here, you can quickly see when the market is getting range bound. Notice all these yellow bars, these yellow bar clusters, and notice too how they're more or less on the same latitude, which tells me that the market is very stagnant right now. Even though this is difficult for us to trade, it's the market's actually very content where it's at. 43.50, the market seems to be very happy with that number. All right, well, Trade Manager, you can see our stops got hit. Trade Manager automatically exited my trade for me. And, well, that's what the tool's supposed to do. It's supposed to free you up so you can actually look for other opportunities. Let's go here with the ATR strategy for now. So now they're going to go test the bottom end of the trading range. And you can see maybe the pendant isn't quite as accurate as the channel that we were looking at earlier. So here's the bottom end of the range, here's the top end. And until the market gets outside of this range, there's really no good opportunities to be had. Here we can try another first micro macro cross. Now we're getting one to the short side. The first micro macro cross develops when the trend lines change over and everything comes into sync. So you see we get red bars, red trend lines, red filter. We've got the warning dot, we've got the triangle hash mark. Oh, they didn't slip us a tick. That's an upshot. They do have some room to move down here. And it looks like they're about to hit our break-even trigger. There we go, got the trade to break even, and hooray, we hit our profit objective also. Let's go over here to the Raptor. And I'll increase my profit target a little bit. This tool that you see me using here on the Raptor, it's a variation of the Trade Manager. This one's actually called the Trailblazer. The significant difference between the Trade Manager and the Trailblazer is the Trailblazer does not have the risk management component of the Trade Manager. And the Trailblazer is set up to be a one-click entry system. So for instance, right now we're generating warning dots. If I generate a triangle and hash mark, I can just hit the sell market button. So we still have warning dots, so not all the signal parameters are met. And we'll enable a stop. All right, so there's the triangle hash mark. Now I can watch it trade below there and just hit the sell market button, and it will automatically give me, all right, not ready yet, automatically give me a trade with a stop and a profit target. I preset my profit targets right here. With the Trade Manager, I had to click for my entry, click for my stop loss, click to submit the order. Not that that's a real big deal, but some people like the convenience of just having the one-click entry system. So there we go. So they traded through our signal. You see I hit the sell market button, automatically have my profit target. I've got my break-even trigger in play. I've got my stop assigned according to my stop strategy, and I can still adjust it. So I want to dial it back a little bit, or perhaps even change it entirely. I can do that too. Okay, so it looks like the NQ a little bit more receptive to the downside today. And we've got, like I say, a little bit of room. Yesterday's lows were what? Yesterday's lows were a long way away still. They were at that 42.90 price, which we know has been a fairly sensitive area for the NQ of late. This tool that you see here in the top left, this is called the Geiger counter. This is also an add-on tool which you can use on any chart. It's not specific to the DTS system. It's essentially a tape reader so that you can see the market flow and trading a little bit more active than what it has been. A lot bigger numbers coming through here. Right now you can see our needle is fairly neutral. Buyers perhaps getting just a little bit stronger here. You see on the tape the green section getting a little bit wider than the red. Now the needle's turning green. So we're getting a little bit more aggressive buying. See whether or not they try to make a run at our stop here. I'll let you know if we get any really good looking trades. Overall, though, the market, well, I don't know. I was going to say a little bit more bullish. You see, we've broken down, or we've tested the top end of the trading range. Now we're testing the bottom end of the trading range. And we're still failing to get outside of here. So the overnight low, overnight high being retested during the morning and continuing to hold. All right, so I've got the Raptor on autopilot. Let's take a look here at the Falcon. This is the swing trader, the very popular tool, the Falcon swing trader. And for good reason, it gives some very reliable signals. With the Falcon swing trader, you pretty much want to stay on the same side of the trade as whatever your trend line is. And here too, there's specific signals that we look for. Right here is our trend change signal. And you can see you had some very nice follow through off of that. On the Falcon, I've also got the support and resistance lines, another add-on tool, something that you can use on any chart. And you can see that we're sandwiched right now between the median line and the primary resistance. And we have been, well, since the overnight session began. Took a nice little bounce off of the primary resistance, traded all the way back here to the median line. Omar, the fellow who likes to trade the Forex with DTS, he likes to use these lines as profit targets and places to cover your trade. So he very likely would have set up a trade that looks something like that. And voila. So now we're trading off of the median line. We'll see how the market reacts to that. Back to the action here on the Raptor trade. Now with the Raptor, or with the Raptor trade here, I've actually left one position on as a runner. So you can see we just hit our break even. And we're just shy of our first profit target. Oh, come on. Don't you dare flinch right there. I'm going to move into parabolics now because parabolics tend to be a little bit more aggressive. So if this market continues lower from here, you're going to see the Trailblazer continue to manage my trade for me. There we go. Hit our first profit target. Let's see if we can get a little bit of follow through off this signal now. Come on. Nope, not going to give it to me. So we've got this area of support right here, which I expect to be retested somewhere along the way. Ideally, we get to see the market fall off a little bit. Give ourselves a chance to get a little bit of open profit before the subsequent reversal and the next move lower. But with the FOMC meeting around the corner, I don't know if we're going to see anything substantial. Especially during these opening minutes. Nope, there they go. All right, so it looks like the buyers are going to take a crack at it now. Maybe. Yeah, we're getting near the top of the hour. Like Jim says, we're having a small opening range of late. Jim also shooting me some advanced decline numbers here. We've got 1,776 buyers and 850 sellers, so about a positive 900 advanced decline. I was going to tell you if any of you are interested in some of the information about these tools, like the Geiger counter or the support and resistance lines, the trade forecaster, this little tool up here, the day ranger. That's this little tool here. It gives you the daily ranges, and you can see we're kind of compressing a little bit. The 30-day range just under 400, the 10-day average just under 300, the 5-day average about 270. And it tells you that the market is getting rather constricted. Oh, anybody who's been following it this last few days, it's been tough. We've managed to eke out our share, but it's been tough. Just a whole lot of sideways stuff. I'm snooping around here trying to find something worthwhile to look at. Here is the crude oil market, and we've got inventory at the bottom of the hour. A lot of times for inventory, what we'll do is if the market has made a good sideways channel, we'll actually use our OCO function right here and bracket the trade to see which way it's going to go. But you can see even crude oil very, very quiet. Early trend change signal on the Falcon down here, and a proper trend change signal developed right here. Almost had a late filter entry signal right here. And late filter entry signal on your Falcon tool. Very, very powerful signal. Very high probability. I'm also watching soybeans, but I'll take a look at any market which is of interest to you. So don't be shy. Yeah, Jim says it feels like the market needs some sort of news. They're waiting on the FOMC minutes from tomorrow, and that is going to light things up. Any markets that's been this subdued for this long, they're very sensitive to what's going to be coming out of the FOMC minutes tomorrow. You can just tell. Vincent is asking, how is the Russell doing? Hold on one second here, Vince. You're going to have to forgive me because I don't have the Russell on my data feed. What? Yeah, I know. They're moving it soon. Then I'll have it. But right now, we're going to go with the mid cap, which is the Russell's twin brother or sister. And I'm just going to load it up here and we'll take a look at. All right, so here's the mid cap. We'll start with the Hawk. And the mid cap and the Russell pretty much move lockstep together. One doesn't really get away from the other. So if you're like me and you don't want to pay another exchange fee, trade the mid cap. It's same tick value, same moves. Very profitable instrument actually. And you can see here on the Hawk scalper, no real surprise. A little bit more volatility yesterday than the NASDAQ. That's a little unusual. Don't usually see that in the mid cap. Couple of macro pullback signals here, both of which had very good follow through. Note what happens though when we start to get too many of the same signal. So here we've got our third macro pullback signal, and it's kind of a prelude that, hey, maybe this market is starting to fall apart, and which is exactly what kind of happened there. We saw that little bit of a dip. But now here we've got the same kind of thing going on. The market's pretty much skewered by all these yellow bars. And we're also within a larger trading range. So that's the Hawk scalper. Let's take a look at the Falcon Swing Trader. So here's the mid cap now on the Falcon Swing Trader. Same story. We did get a trend change signal here. I don't know if that would have reached our high probability target. Probably not. No. Well, actually it did, because with the mid cap, I tend to double the profit objective. So we did actually hit our high probability target if I'd gone with the default targets. So you can see we got the signal, hit our high probability target, hit the primary resistance, boom, went right back down here to the median line. But it's fairly evident we've got a pretty sideways market here, sandwiched between the primary resistance, the median line, our filter, all broken up, just not a real welcoming market. And here's the eagle. Oh, the eagle is actually showing us a slightly different point of view here. We're getting a rule of 3 scenario on the eagle. Now, the rule of 3 is actually our counter trend signal on the trend trader. You don't need to trade the counter trend. A lot of times you can just use it as an early warning, but we've got this telltale test of the extreme right here, where they've come up short. We've produced 2 signals against the band. The band is currently bullish. We produced 2 signals against the band, so things looking a little bit more bearish maybe on the mid cap. We'll see. I might not be too anxious to get into this trade. If it goes up and fails yet again, then yes, I could be persuaded to buy into or to sell that. But right now we're still kind of looking for some direction. And bear with me here a moment. I'll throw the mid cap on the Raptor. And here's the Raptor with the mid cap. And, you know, same view, different angle. A lot of yellow bars through here. The Raptor borrows that from the Hawk Scalper, so you can quickly see when the market is getting sideways and choppy. We're working on a possible trend change signal. We've got the warning dot, but that's all we have so far. And look at the Geiger counter here. Is anybody out there? Look at the bid and ask. It's non-existent. So things a little bit quiet in the mid-cap / Russell. Yeah, like Mark says, a lot of pent-up energy. I think you are correct. And I think, let's see if we get a buying opportunity here. We're starting to get a little bit of a base going on. We're getting a trend change signal here on the Falcon. Let's see if we get one on the Raptor also. I can get into the Raptor a little easier. We just encountered the hard edge. where we normally see some sort of reaction. Come on, give me a chance. Come on, you Snickers. Come on. Like that little burst in buying here on the Geiger counter. All right, we might get a first micro-macro cross signal. There we go. And I'm going to try to put a runner on this one. Let's see if we can't get a couple of positions. Can I cover it down here? Oh, shoot. Just ran away on me a bit. Let's get a second push on that one. And in case you're wondering, you can always use the buy and sell market buttons on the trade manager also. It's just a habit for me to enter the traditional way with the tool. Oh, we did get an early trend change signal here on the Falcon. It came right on the median line. We'll see if it comes back now and offers us a proper trend change signal. Yeah, Jim says he's going to buy and sell the 10 a.m. range. This first hour that you see here, these green lines. If it gets down here, Jim's going to look to be a buyer, and if it gets up here, he's going to look to be a seller. And you know what? On a day like today, that's probably not a bad plan. Well, we've got some room here if we can get a few players to cooperate. All right, here they go. First micro macro cross signal, just about to bring me in. Slipped me a bit. I'm going to disable my break even. Just see if we were able to run this one up or not. A little bit of a tricky trade because even though it is a first micro macro cross, even though it is a higher probability signal, the market does seem to be in a little bit of a downtrend. So technically, this could be considered a counter trend type signal. But we'll see. We'll see if we can't encourage it. Jim says, thanks for canceling the break even. I know it annoys you, Jim, because sometimes we'll hit the break even trigger only to see the market reverse. And on a day like today, when the market is likely to make big ranges, yeah, it might be better just to park the stop down here and let it do its thing. See if we can find a probable target. Where's my support resistance suite? Okay, so 43.56 half is where the primary resistance is at. That would probably make a pretty decent target. And there they go. We're getting a little bit of participation. So 43.56 right up here. No point in being greedy, right? So we'll sell one. Jim says the advanced decline getting a little stronger. 1,900 buyers, 800 sellers. So about a positive 1,100. We'll see if that has any trickle down effect. This 43.50 area, that's kind of where all these yellow bars clustered before. So that's going to have a little bit of price sensitivity to it. If I were just scalping all in, all out, I would have hit my high probability target already. But we're trying to be a little bit more, well, don't want to say aggressive. Optimistic. There you go. I'm going to be a little bit more optimistic. All right, a little bit of a retracement here. Could develop into a macro pullback before we get the next leg up. Oh, it's almost like trading in slow motion. In another 10 minutes or so, we'll take a look at crude oil again, just before the inventory, see if we can't set up a bracket type trade. Let's go. Come on, NQ. You know you want to. Once we get above this little swing high here, it should be smooth sailing. All right, so we're challenging the high. Get out of that 43.50 area. There you go. Try to start tripping up a couple of buy orders. Come on, keep going. Here, we'll give it a little nudge with the mouse, push it higher. Yeah, 43.50, still putting the brakes on. There we go. Come on, give me 51. There's 50 quarter. Oh, man. Get up there. All right, at this point, you know, very often you could consider going to break even. You can hit your break even trigger manually. You can go with a different stop strategy, perhaps something that's going to bring the stops down below here. I'm going to give this trade every opportunity. If we hit 43.52, I'll start to get more aggressive with my stops. Or if it looks like we're going to make an obvious failure here, just plodding along. Oh, should have taken a closer look at soybeans this morning. Nice signal out of soybeans here on the Eagle. Market opened. Gave us a hard edge bounce. Very nice progression out of that. Soybeans a great market to trade if you're looking for another market to add to the mix. Soybeans, you could do a whole lot worse. Now, I'll warn you, the downside with soybeans is you do open yourself up to the possibility of a limit move. There are limits on the soybean market. Not to jinx myself, but it's been, I don't remember last time I saw a limit move in soybeans. Nice thing about soybeans is once they settle on a direction, they pretty much stick to it, which is why I have such large profit objectives. Last couple days, the market's been a little bit quiet, but the day before, you see you had some very nice ranges. Here was a rule of 3 signal in soybeans, and had you taken it on the hash mark, you can see quite easily reached your profit objective. And rather quickly too, I might say. So soybeans looking a tad more bullish today. All right, so we've hit just shy of 52. There we go. We got 52. I'm going to enable my stop strategy now, force the trade to break even. And I'll let the ATR manage it from here on out. What have we got in open profit? Oh, that's not bad for a single car on a scalp trade. That's not bad at all. Looks like they need a little bit more encouragement. Come on, get up there. Get going. Get going. Shoot a trend line across the bottom here. See whether or not they're going to respect that. Oh, don't you dare. Going into into a macro pullback phase. I'm going to try to hit my break-even trigger. Oh, you Schweinehunde. Now watch them continue here to 56. Oh well. Normally, though, like I said, I would have been in and out with profit already at my profit target. That's on a day like today, really that's your best course of action. When you have open profit, just take it. All right, let's get ready here for the crude inventory. Now, there's really two ways to trade a report day. If the market has an obvious range, you can bracket that range going into the report. If there doesn't have an obvious range, you can let the report hit the floor first and then bracket whatever type of range you might be seeing. So we'll give this a couple more minutes here. We're about 8 minutes out from the inventory report. We've got some obvious lows here off the primary resistance. We're trading too close to the current highs, however. And ideally, if we traded somewhere here around 45.50 in the next few minutes, that would give us a good zone to bracket. All right, come on. I may end up just bracketing that range anyhow, just so I can show you the OCO order. So what we're going to do, I'm going to go with a very generous stop. And this stop is simply my safety net if things go very poorly for me. We'll use the OCO function and we'll enter a buy order above there, and we're going to place a sell order down here. Now the thing you need to remember with your OCO orders is they are live the moment you put them on your chart. What concerns me a little bit is here on the Falcon, we have the makings of a trend change. See, we've got several double dot signals here, which is a counter trend signal. We're starting to turn over on the trend line. My concern is that the inventory report will come out. Crude's going to make a fake out here to the top, and then boom, fall like a rock. I'll give myself another couple of ticks here on the entry. Not that that's enough for crude oil. And maybe what I'll do is, maybe I'll set profit targets as well. So if, let's see, there's one zone, there's two zones. Let's swing for the fences. We'll go for 3 zones. And there's the primary one tone. We'll go for 3 zones to the downside. One, two, three. A lot of times with crude on the inventory, I'll just let it run, see how far I can take it, but will be a little bit different today. Okay, so we're all set up. A couple minutes still before the release of the inventory report. Now, I'll tell you right now, folks, this is not the most enticing setup. We're in a trading room. I'm demoing software. If you wanted to trade this report for real, I think this would be a better one to perhaps let the market absorb the report, see what kind of range you get, and then bracket. But I've got my stops enabled, so Trade Manager is automatically going to give me a stop. And, I've done everything I can to protect myself. Arlen's asking, can I do the same kind of thing using the Trailblazer? Well, yes and no. You can set up your trades just like this, Arlen, but they won't be OCOs. The nice feature about the OCO is whichever side fills here, the other side should cancel. With the Trailblazer, you would manually set your buy and sell orders, and your profit targets would be automated. But let's say we filled to the top side, you would have to manually cancel the other order, which isn't a real big deal. If crude does fake out, at the worst case scenario, this order is going to become your sell order. So if it went up really quick and then lightning fast bolted down, well, your sell order stopped you out. What Trade Manager is going to do is if we fill to the upside here, this order should cancel, and the Trade Manager is going to place a stop right here where you see these blue dots. All right, about a minute to go. We should see the bar get a lot more active here in a second. Look at that, dead neutral. Is anybody actually buying and selling? Yes, they are. So our possible trend change signal all of a sudden became a lot more bullish. Crude also within a very tight little range here this morning. All right, we should be seeing the inventory report come out any moment now. Any moment now. Oh my gosh, there it is. All right. So we can adjust our parameters also because these orders are live. Let's say I wanted to bring it in a little bit tighter. And let's say I want to adjust my profit objective also. I'm working on a trend change signal to the downside now. So we've got our down portion. Our trend line has changed color. We're getting the up portion, and then we'll see whether they come back with the sell signal. Here on the Trailblazer, if we were going to duplicate that as per Arlen's question, I would put a buy order above here. I put a sell order below here. Stops are enabled. I'll make them a little bigger. And once one side fills here, you'll see that I'll manually have to cancel the other order. So if they start to trade lower, oh, and by the way, the Trailblazer can be put on any tool. I just happen to have it assigned to the Raptor. You can put the trade manager on the Raptor, and you can, and you can put the Trailblazer, oh darn it, I'll find it, don't worry. There it is. And you can put the Trailblazer on the DTS tools also. It's just the way I happen to have it set up. All right, so a very tight little range here for crude oil. Post report. Oops. Yes, sorry. Oh, shoot. I just canceled my OCO order as well. Well, let's put that back on. Yes, I put the wrong order in for a profit target. Yeah, sorry. Mark says, Eric, I think you got the wrong profit order here. I'm selling, I need a buy limit. Thank you, Mark. And I'm buying, so I need a sell limit. There we go. Gee, almost as though I knew what I was doing. Almost. Tony asked a good question here. He says, if the buy side is triggered with the OCO order, are the profit targets engaged as well as per the settings here? No, not on the OCO order. Here you're going to see on the trade manager, however, my profit targets will be engaged because this is not an OCO order. This is just a manual buy and sell order. And we're just going to get stuck here. Nobody wants to play nice today. Wow. So it doesn't look like anything substantial coming out of the crude inventory. Can't even demonstrate the OCO order to you. I'll put that away for now. With the OCO order, of course, because these orders are all interconnected, if you cancel one, the others cancel. So now you're going to see the OCO say OCO 5 because those are the different orders that we've had in place so far. Sell limit, buy limit. This is dangerous now because they're wandering, and I welcome a sell to the short side. I wouldn't be so concerned about that. The buy side right now seems a little weaker. Yeah, Arlen says, wow, normally a difference of the forecast and actual would have had a bigger response. Well, yes and no. That's why I don't get hung up on following the reports themselves, because it always boils down to what the market is anticipating. So the change in price was probably anticipated here, the difference between the inventories. It's already been factored in, and then when the report came out and it was pretty much what everybody was expecting it to say, the market doesn't move. That's why you'll get markets rallying off of seemingly bearish reports and falling off of what is seemingly a bullish report. And all the talking heads on TV are left to scramble and try to figure out why. Well, it always boils down to market perception. Yeah, good question here from Tony. Tony asks, when placing the targets on an OCO order, do you turn off the OCO button and place the targets? Yes. What I did the first time, I noticed that they were all linked, and I haven't tried it yet, but I suspect that the wrong order would cancel. Like if I bought, I don't think my profit target would stay in place. Not that that's a big deal, because I can always manually enter a profit target afterwards. But yeah, I just want the OCO to be on my entry, and then I'll manually delete the profit target that I don't need. And they're not even going to give me a chance to do this. So we're going to do stuff that we can do because we're in a trade room. I'm just going to force it to fill. Or maybe not. Crude oil is afraid of my order here. They're going to spend the rest of the session right here at 45.60. They're not going to budge. There we go. All right, so you see we filled the buy order. We got a default stop because it was opposite our stop strategy. I should have preset that to be a little bit wider. I forgot to do that. But I can preset the default strategy or default stop if it prints against my stop strategy, so that I'm not too terribly tight. You notice that we filled the buy order, the sell order canceled. I could cancel the profit target down there. I've automatically got a break even trigger in. I can adjust my profit objective as needed. So there's the OCO feature. But that's about all I can take of that at the moment. Yeah, I think you're right, Jim. Jim says, 2 trades, he's up 20 ticks. He says, I'm taking a break. This is too slow. It is. I don't think we're going to see anything substantial. I think we're just going to see this market waffle for the rest of the day. Tomorrow is the big day. So I appreciate everybody's questions, because it at least helps us pass the time a little bit. I'll tell you the truth, if it wasn't for the trading room, I wouldn't even be looking at a chart this morning. Well, I might look at it, but it's fairly obvious there's nothing tradable here. We're still within this trading range that we highlighted. In fact, they went down to the overnight low, but getting a green bar sell. Jim says, what was that German phrase you spouted? Schweinhund. That was for the amusement of our European guests. I see we have a couple Swiss people in the room this morning. All right, well, they're inching a little bit lower here. I wouldn't have gotten too excited about this green bar sell, even though it's a high probability signal. I suppose we could try to take it back to the lows. You can see where our high probability profit target is, just the other side of the lows. Tough slogging though, just real range bound chop. A trading friend of mine used to refer to these types of ranges as the abattoir. And for those of you rusty with your French, abattoir means slaughterhouse. And that's all that's going on here. Traders just getting churned and burned. All right, fantastic. Mark's asking a question here that will probably take up at least a few minutes. Mark says he's having a little trouble with the rule of three signal. Can you go over it? Okay, well, first off, the rule of three signal, pardon me. The rule of three signal is a signal that's unique to the eagle, although I'm starting to see a little bit of bleed over into the raptor. And that's because of the band. The rule of three signal develops when we get signals against the direction of the band. The first thing you need to note with the rule of three signal is if the band has no direction, there is no rule of three signal. So when you see signals, counter-trend signals developing in a situation like this, don't get too excited because there's no trend. What you're looking for with a rule of three is you're looking for a market that has actually an established trend to it. Now, there is technically a rule of three signal here, but let me find you a stronger one first. No, this one's a little better. Okay, so we have a bullish band. We have a market that has some direction to it. Yes, it's not as nice and smooth a progression as this one. This would be the ideal, but this one back here actually has a little better structure, which is why I'm going to show it to you first. So the rule of three signal actually developed right here. We produced in a row 1, 2, 3 sell signals against a bullish band. This would have either alerted you to a possible trend change or just given you the opportunity to flat out sell this market. Now you could use the ATR as a filter, in which case this now becomes your signal bar and you could short below here. But the all-important detail to the rule of three is not the three signals, but rather the test of the extreme, where we've got the failure and it looks as though the market's going to change direction. Once you have that test of the extreme combined with signals producing against the band, you can be pretty sure you've got a rule of three signal. And that test of the extreme is so important that I'll actually anticipate a rule of three signal, or even take the signal after, well, two signals even. That's why sometimes you'll hear me refer to it as a rule of three, and it will only be two counter trend signals, or perhaps even sometimes it will drag out and you'll get four. NASDAQ not being very cooperative here on the Eagle as far as rule of threes. What happened at the end here? Yeah, that was a little bit too sloppy. Technically, 1, 2, 3. Here was your rule of three. Really big test of the extreme. And you can see our band flip-flopped a little bit through here, which made it a little bit more difficult to identify. I'm trying to find you something that's a little bit more textbook. Well, here's a rule of two. 1, 2, you've got the test of the extreme right here, right? And now we would anticipate the market to head lower. There's your third signal. You've got the test of the extreme, three signals counter trend. You could consider, doing something like this, and then the market falls off. Now, very often with the rule of three, as with most of our counter trend signals, you're going to get a with trend signal in more or less the same neighborhood. Let me see if I can find you one more that might be a little clearer. Well, this one's not bad. So we've got an obvious direction. There's a run up, the market comes down. There's signal number one. Oh, there's our test of the extreme. There's signal number two. Oh, there's another test of the extreme. We're making lower highs. Here's signal number three. This is one that you can sell with a great deal of confidence because we're making the lower highs, right? We're confirming that, in fact, the sellers do have control of the market. It took a little bit of heat, but eventually got to your profit objective. So let me go back here to this one that I told you was better looking because of the long trend, but a little bit more difficult to identify. Can you see what the problem is? We don't really have a decent test of the extreme, do we? In hindsight, we know that this was it right here. Itty bitty little bounce, but when it was printing, there was no way to really anticipate it. But we did come with a trend change signal right there, and I don't know if that was enough to get to our profit objective, but probably gave us enough that we could manage the trade at least to a break-even type situation. Notice, however, if we had taken it off of the rule of three, off the second signal, we would have in fact hit our high probability target. But it's that test of the extreme, that all-important test of the extreme, that tells you that in fact it is a proper rule of three and saleable. Julie is asking about the parameters here, if this is a 2150 EMA cloud. Honestly, Julie, I don't know. There were about three of us involved in the programming. It's kind of like, one of these top secret missions where nobody knows all the working pieces. I should mention that in regards to the features that you see on here, this is only the surface, literally the tip of the iceberg. There's about a half a dozen parameters working in the background that you don't see, that have to be met before a warning dot is even generated. What the programmers did and what we did is we tried to give you enough information so that you could make a decision, but not so much as to confuse you. So they've been stripped down as much as possible and no more. But that's why we've simplified things, because honestly, the most difficult thing in trading, and this is going to seem strange to some of you, is not being right about the signal. The most difficult thing in trading is being able to make a decision. Here, I'm going to build a chart here for you in a second. Some of you will have seen this already. This is a fellow I was working with, and this is what his chart used to look like. And actually, for all I know, it's what it still looks like. I had to make a copy of it. And I'm not picking on him. He's far from unique. But how do you make a decision with this? And he couldn't. That was his biggest problem. He was great trading in hindsight. He would tell me, oh yeah, okay, well, this line was more vertical here and it crossed over here. I would have bought here and taken advantage of that huge move there. Yeah, sure you would have. How can you trade this? And be honest with me, at one time or another, your charts look something like this. You probably even threw Bollinger Bands on here or something just for good measure. Where are they? There they are. Let's throw some Bollingers on there. There we go. Now we're cooking. You can't trade like that. So to avoid this kind of mess, the charts have been severely stripped back, and we look for key signals like the green bar sell, like the rule of three, like the first micro macro cross here on the hawk, or the a macro pullback signal, of which we have not had one today, at least not one that triggered. So try not to get too hung up in the actual parameters. Honestly, folks, if trading was as easy as using a 40 EMA instead of a 55 SMA, we'd all be multimillionaires. But trading is much more about the price action itself. That's why I really appreciate these mean Renko bars, which you can purchase as a standalone, by the way, if you're interested in them. I find, as far as discerning the price activity, you get a very clear picture of who is in control. Like right now, I can tell you the sellers have control of the market. We've had this little intermediate swing here. The market's heading lower. We produced a sell signal right here, which was an early trend change signal. And we've drifted back down here to the median line. You can see quite plainly that the market was making a nice little bottom here. This is all information that you won't see on a time-based chart or even a tick-based chart for that matter. Dan is asking, does the software help you avoid the chops? Yes, it does. The hawk is probably the most sensitive to this. And when the market is extremely choppy, as it has been, you're starting to get all these yellow bar clusters. And your filter just breaks up terribly. These yellow bar clusters right here, especially when they're printing on more or less the same latitude, tells me the market is range bound. And it just pretty much tells me to sit on my hands until I get a high probability signal, or I get a breakout outside of this range and then produce a signal of something that I can take advantage of. So the hawk, being the scalping tool, is perhaps the most sensitive to that. The eagle and the falcon, well, you can see the eagle is just a mess. This is your trend trader. And look at it. There's no trend there. That's fairly obvious. Whereas here's the other day, and you can see much smoother. This is what we like to see on the eagle. Like to see a little bit of progression, not too much violence in the moves back and forth, but a nice little wave up and a wave down, and here we come with another signal. Oh, there's our buy signal after our trend change, and nice progression higher. The Falcon kind of falls in between here. The Falcon filter, when it starts to look like a tartan, you know that the market's more or less sideways. But here too, the price action itself, like look at this, our filter all over the place, and the price bars all over the place, no follow through. So visually also it becomes very obvious that you're within a range. Tony's asking, can you expand on using the fixed trailing stop? Absolutely. So let's say we go to our fixed stop strategy. And actually what I like to do before I do that, when I'm using the fixed stop strategy, I'll always pay attention to the day ranger to see what my ranges are. So right now it looks like an average 5-day range is around 270 ticks, and the market is contracting. So let's say we're going to round it down to 250 ticks. So let's say I want to offer, I don't know, 10% as a stop, 10% of the daily range as my stop loss. So I go here to the fixed strategy. I'm not sure why they offered me the close and the open. I could see trailing a stop off of the close. I don't know why anybody would want to trail one off of the open. I prefer, let's say we're going to buy. I'm going to pretend I'm going to buy here. I want to trail a 25 tick stop off of the low. That's going to be 10% of the daily range. I'm going to preview it. And it's like, oh, if I'm a buyer, my stop is on the wrong side. Why did that happen? Well, in the background here that you don't see, there's actually a moving average that the programmer employed to tell the program which side of the market the stop should display on. Otherwise, you'd have stops there and you'd have stops here. To get it to go to the right side, if this ever happens to you, throw a minus sign in front of the value, click accept, and now you'll be trailing a stop 25 ticks off of the low of the last bar. So the last complete bar, this is 25 ticks lower. So let's say my stop is engaged. I'm going to buy the market. Now I'm trailing a stop 25 ticks. And of course, it's fully adjustable. You can change it, make it more or less. All right, so that's how your fixed stop strategy works. A very good strategy. I don't use it nearly as much as I should. A lot of times I'll just go with one of the programmed ATR type strategies like the super trend or the ATR. Now notice my stop strategy is up here and yet my stop is here. That's because Trade Manager has a default value for my stop when it's against the stop strategy itself. Because that would be bad, right? If you're long and your stop strategy is here, you enable your stops and all of a sudden it takes your stop from down here and it whips it up here. Well, guess what? You've just stopped yourself out of the trade. So all those things have been accounted for. Adam likes to brag a little bit, and it's true. The fellow who is responsible for the programming for this is a very gifted programmer. In fact, he helps program the guidance systems for the cruise missiles. So you know this programming is tight. And this is what he does in his spare time. Oh my gosh, Julie said take a look at crude. Oh my gosh, Julie, you're right. Look at crude oil. I don't know what took him so long after the inventory. That's what, like a good 10, 15 minutes. Yeah, about 15 minutes, and they finally broke out. Got a red bar buy off of the hard edge. That's one of our high probability signals here in the Eagle. Nice to see that follow through there. That's the problem with crude oil. It's so darn expensive. There you go. Yeah, something sure got crude oil excited. Well, you know they'll be using that excuse to hike the price at the pumps a bit. Vince is asking, what are the high probability trade setups, and can DTS be programmed to alert me when the high probability setups occur? Well, yes and no. I know I hate those kinds of answers too. Hold on one second here. The high probability setups are really not that difficult to spot. We go over them every day in the trading room. For some of them, we've even developed what we call a cheat sheet. This is the cheat sheet for the hawk. For whatever reason, it seemed folks were having a little bit more difficulty with the hawk than some of the other tools. So we did this cheat sheet. And you can see from here that there's really only 5 signals that we look for. And they're pretty easy to identify, really. The first one, your highest probability one, is the first micro-macro crossover. It's simple to identify. The micro line, that's a thin one, crosses the macro line. It's the first signal that occurs when everything is in sync. So you got green bars, green signal, green trend lines, green filter. You get the signal, you buy it or sell it, whatever. This signal is exceptional. I take it almost, I'll follow it almost blindly. It has like a better than 80% win ratio on it. The next highest probability signal is the macro pullback signal. Again, very easy to identify. Everything stays in sync except for the micro line. Micro line changes color. And then you get your 4 arrow consolidation signal. So the signals just start to cluster. Off that 4th signal, we'll tend to look at buying or selling accordingly. Just a little note here, some of the faster markets like crude, you'll only get a 3 arrow consolidation. And then after that, you get your post 4 arrow consolidation signal, which incidentally is also a macro pullback. And then your last signal is the red bar buy or the green bar sell. These tend to be your weaker signals, which is why sometimes we'll sell the failure of them, and you can see why. We'll treat them as a counter trend or merely as an early warning that perhaps the market might be running out of steam. Now, those are your high probability signals for the hawk. As far as DTS alerting you, you'll get an audio alert when the signal starts to develop. Like I just heard trend, so that I'm running 3 charts, so I can quickly look at my 3 eagle charts and see that, in fact, the NASDAQ chart was the one here producing the trend signal. And then I look at and analyze and say, well, that's not one of my high probability signals. I'll just avoid that one for the moment. Like I say, we go over these every day in the trading room. It really doesn't take that long to get a handle on them. There's only a handful of signals for each tool that we really want to concentrate on. And they're all pretty easy to identify. Tony's asking, is the Geiger counter like reading the tape? Yes, Tony, that's exactly what it is. It's giving you a visual of the time and sales, so you can see where there's clusters of buying and selling. So the little cluster of buying there, it looks like it was a little lopsided. Right now, the needle a little bit more bullish, so we might anticipate a little bit of buying activity here. This was developed in response to one of our members. He said, can you give me a way to gauge whether it's safe to stay in a position or whether it's time for me to get out. So it was actually developed as a tool for an existing position. So let's say we had bought down here off of this buy signal, and now we're in this trade, and the market's moving against us a little bit. Should we stay in? Well, yeah, right now we still got a lot of buying going on, so why not hang on a little bit longer? That's how this tool was developed. But it's also useful for gauging whether or not you want to get into a trade. Sometimes you see these little peaks and these little islands here where it's suggestive of stop running. Where if we get this little isolated island where all of a sudden we get all these buy orders filled and no follow through, well, then that might be a good reason to snuggle in that stop a little bit. But yeah, a very helpful tool. Kind of cool looking too. All right, just checking the questions, making sure I haven't missed anyone. Zoltan's asking, what kind of dog was that in German? A Schwein. A pig dog. Surely you guys must have seen an old World War II movie. I'm not that old. Where the Germans are calling everybody Schweinhund. Yes, that's right, pig dog. All right, here come the buyers again. They're tackling that whole 43.50 area, getting another first micro macro cross signal on the hawk. Same problem as before. Where do you cover this so that you give the trade a half decent chance? My stop strategies are way up here, but the way the market's ranging today, I just feel like I got to give it a little bit more room. Let's X out the break-even trigger and see if we can get above 43.52 this time. There's 53. Okay, so things looking a little bit better. I'm going to move into the parabolics now. Hit my break-even trigger. There we go. We're probably going to see a little bit of a reaction here, but hopefully the buyers will step up right away. And once again, this first micro macro cross signal, look at that, another $100 in open profit. You could make a living trading first micro macro cross signals. Let's just go through the chart here. There's one right there, first micro macro cross. Didn't get one there. There's one right there. Doesn't look like it went very high, but you hit your high probability target. Okay. Oh, here's one. Here's one. Just such a reliable signal. There's one. Let me see if I can find you one that failed. Here's one that gave you some heat, which is why I tend to leave my stop a little bit further away to start. Here's one. So you can see why I have such confidence in that signal. Every time you get a first micro macro cross, it's just such a high probability signal. What have we got now in open profit? 120 bucks. What was my objective? 43.56. I better not press my luck too much here. We'll get out 43.59-ish. If we get that $190 target, that would be a very nice little trade. And parabolics are about to stop me out here. Well, that's okay. Still a good trade. And that's why I say those types of signals that just almost make it easy. And they occur in all markets. Like here's the crude oil. There's the first micro-macro cross right down there. See? Look at that little one. Nice thing about the hawk, because it is a scalping tool, a lot of times you can set up the trade not with less risk, because your risk is controlled right here. But the parameters are such that it's easier to frame the trade than sometimes on a tool like the Eagle. But look at that. That's a $1,000 move right there, folks. All right, now they're back to the top end of the trading range, and things are starting to get a little bit soft again. Probably a good time for us to button up the room, unless there's any other questions. No, doesn't look like it. All right, you guys. Thank you very much for your attendance today. Thank you very much for your questions. It would have been painful otherwise. If you are going to try to slug it out today, I think you want to stay with the buyers. Definitely seems to be a bull market today. I would not pay that much attention to any sell signals. Rather, I would look at the pullbacks as buying opportunities. Or do what I do. Phone the golf course, see if you can get a decent tee time. I don't think you're going to miss out on too much. What we just saw right there may well have been the move of the day. Okay, you guys, DTS owners, I will see you in the trading room tomorrow morning. Remember, next week, folks, we have another open house. I'd love for you to join us then. We'll talk to you later. Bye for now.